NVIDIA's shares were down after a report that the chip maker is having doubts about its investment deal with OpenAI. Chief Executive Jensen Huang denied the Wall Street report that he's unhappy with OpenAI's strategy. Even so, shares in the chip maker are slid down nearly 3% off the session lows. Bain Capital's Stephen Pagliuca says many companies will have no choice when it comes to investing in artificial intelligence. Here in Dubai, he joined me, and where Steve compared the current AI boom to the early days of the internet.
Basically, business performance is very strong still, and I think we're in probably a good cycle right now where AI, as you know, is driving everything. And as opposed to the dot-com bust, that was financed by some debt and by a lot of 1,000 companies forming. AI is very financeable because these big 7 companies have billions of dollars of cash built up, and it's existential to them. So they will spend that money, and that's ratcheting through the whole system.
But which is perfect in a sense of it's necessary, but the productivity gains and the profitability from those investments will come eventually, but we don't know when.
Yes, it's going to be a while.
And that's a problem for markets.
And they're, by definition, they're going to overspend, because if they don't spend, the competitor will take it away. You know, if you're Apple or you're Amazon or you're Meta, you've got to have the infrastructure, and so it is booming.
Right, but is the market sophisticated enough, or what I would describe as, rephrase that, is the market not childish enough that it can look through that to the future profitability, or is it going to punish because you missed your quarterly number?
At some point it will punish, but they haven't punished yet. It's starting to happen a little bit. But again, the company's perspective is they got to spend that money, because if they don't have the infrastructure, they don't get ahead in AI, they're going to really fall behind the competition. So this crazy competition between these very well capitalized companies is driving the whole economy. And then there are knock-on effects because you need energy for that. So you're looking at things like fusion, nuclear power being put up. So the whole, they're going to spend in the next 3 or 4 years over $1 trillion of investment. That's incredible, that's unheard of, and that's going to ratchet through the economy.
It's going to ratchet and boost and put it on steroids, but is there a moment when we say this is not sensible? This does not make common sense?
Well, the markets will determine that.
But how far are we from that moment?
I think we're far from that moment, because these companies have cash. The market knows they have to be state-of-the-art in AI to beat the other companies, so you have to make those investments. And you know, I'm on the boards of several companies that supply those companies, and our orders have doubled and tripled. And we're having to invest billions in these companies now to get those orders fulfilled. And that's not even speaking to the energy need, which is gigantic.
If we look at your own areas that you're looking at, biotech, AI, the growth of all these areas, what's driving it?
The fact that the new technology, we've mapped the genome, and now with AI and quantum computing and regular computing in massive scale with GPUs, you can now do analysis, you can do almost simulated clinical trials, you can do amazing things you couldn't have done before, faster, quicker, cheaper, and that's going to drive improvements in the technology and new breakthroughs. Now,
for a man who has made a sizable amount of money in very sensible areas of the world, or industries, you then decided to get into sports teams.
I did.
Which of course is exactly the opposite. It is a labor of love that consumes large amounts of money, and you have to really hold your nose sometimes and enjoy it.
It is. You have to be disciplined, and the clubs I've been involved with, the Celtics and now Atalanta, have had fantastic management, and they've been able to kind of balance that fact of not losing lots of money but still winning. It's been fantastic to be involved. There's nothing like it.
Kevin Walsh at the Fed. Looking at the comments from everybody seems to think it's a very good move. That, you know, the jury is out on whether or not what he agreed before he signed on. But as an economist, as a policymaker, people seem to be very pleased.
Everything I've read, you know, I think he was the youngest guy ever on the Federal Reserve Board,
sure,
and one of the brightest students. So everything I've read has been positive so far, and the markets have reacted positively to that.